Hey traders, welcome to this week's Forex forecast using fundamentals, commitment of traders data, and supply and demand. The purpose of these weekly videos is so that we can go over the important data and align it all with the technical analysis. Specifically, what we use is supply and demand zones. And if you're new to the channel, welcome. I do these videos every weekend before the new trading week for all my subscribers. So hit that subscribe button if you want to be part of the team, and hit that like button if you enjoy the video. I really appreciate it. And check out this latest video I just uploaded yesterday. It's my CAD yen trade review. It basically breaks down the whole strategy that I've been using and how I've been trading recently. And it'll kind of give you a better breakdown of kind of what I'm looking at and how I like my top down analysis starting from fundamentals and all of that data. First, I just wanted to point out this little article here. Powell maintains dovish stance after jobs report. So basically, Jerome Powell, the Federal Reserve Chair, he reiterated on Friday its pledge to maintain interest rates lower for years. So basically, they're saying that they want interest rates to be low for many years to come, and I mean that is essentially all they can do. Is they need to have the rates low because the U.S. has so much debt that they need it to be low. So I think, in my opinion, that's a weak sign for the U.S. dollar. So yeah, we'll start the analysis right now. So this is a little sheet that I came up with here, the Mastermind Trading Group sheet. It's not really my newsletter. It's just kind of just a sheet going over the data here. This is the currency strength. So as you can see, I put a little report in here. The Aussie dollar still remains number one. The UK remains the weakest. Pretty sure all these numbers stayed the same. Canada and the United States are now tied for ranking. If you look down here, the report, the Australia's GDP has changed drastically. This is not even close to anything. I think year over year was actually positive last week, if I don't remember correctly. But yeah, as I wrote here, Australia GDP quarter over quarter, year over year have dropped significantly compared to last week, but the Aussie dollar still remains the strongest currency, or according to the way that I rank currencies, according to all this data here in my ranking system that I've come up with. The euro area inflation change. So the euro had a change in inflation. Last week, the euro's inflation rate was positive 0.40%. This week, it has changed to negative 20%, entering into a deflationary period, which some people view as bad and some people view as good. I'm not going to get into all that. I've definitely talked about that in a couple of my recent videos, so go check that out. But even though the euro remains ranked number 5, the COT reports are still showing majority long bias, and we'll go over all of that in a second. But basically, we're going to start on the U.S. dollar here. So actually, we'll start here. So the U.S. dollar remains number 4, so it's not bad. It's not like a strong buy. It's not a strong sell. I guess I am bearish the dollar. I just think that we are going to be seeing a pullback in the dollar. And as you can see, we have 40% long, 60% short. So it's not a crazy number. It's not a 72 to 28 or 73 to 32, but it's also not a 50-50 either, right? So it's still majority short, but nothing crazy. I think I've talked about it in the last couple of videos too, that they are going to be taking some profits on the shorts on the dollar. That's just what I believe based on the rally that it's had. And as you can see, not much has changed in the COT data here. The commitment of traders, they added 766 longs, took off a little bit of shorts, but overall not much has changed. So I am still bearish on the US dollar according to all this fundamental data. And then we'll go over to the chart here. DXY, it broke this daily demand, which I talked about. I think I talked about how it's not really demand, but it's like, it was an area where buyers were clearly stepping up. This broke, so I'll get rid of that. And right now we are sitting in this supply, which actually I'll actually draw this as a zone like that. Okay. So we're in the supply right now. As I think I talked about last week, we did have a rally up, and I could see us having a pullback and then going to this monthly demand area down here. That's a pretty nice demand area, as you can see. So I still think we have some room to fall in the US dollar but I think we're gonna be having a pullback up to here. I think it's gonna get weaker down here and fall. That's just my own opinion. And even if you want to look at this bigger time frame, the DXY is in this 3 month area of buyers stepping up. I don't think that this will hold, but I think we're gonna be, I could see us just coming down here in this monthly area, just messing around for a bit and dropping down. As far as the daily goes, I could either see this just happening and falling back over, going to this monthly demand area, or going a little bit higher into this area and falling. The only problem with this area is it is tested, so we'll have to see what happens there. But overall, I am bearish on the US dollar. All right, and as far as pairs go, we'll start with the euro. So the euro remains number 5 as far as the weakest, so it's the second weakest currency. But the confusing thing is that they're 82% long and 18% short. This is the biggest difference in this whole currency ranking. This is the most majority long here, which is kind of weird. It kind of makes sense too, because the euro in the United States, that's what the US dollar index is. It's like, I don't know what the percentage of the euro weight in there is. But it's like over 50%, I'm pretty sure. Or maybe it's a little less. I don't know. But overall, it's a very strong bias on the euro. We can even look at the COT data here. Yeah, 82% long, 18% short. They did take off some longs here, so they are taking some profits, clearly. So last week, they did take some profits. But overall, they still remain extremely bullish. Still, it's not like they took off 40,000 positions, right? Even if they took off 40,000 positions, they would still have 200,000 compared to 54,000, right? So, I am expecting them to take a little bit of profits off, especially considering, and even more to come. We'll look at the sheet here too. So yeah, clearly they've been taking a little bit of profits here, because the Aussie or the euro has been on a tear lately, and I do see us coming up to here. On the monthly, same thing. If you look at the dollar, we're coming down to the demand because they are pretty much inverse. So for now, I am still bullish on the euro. I'd like to find a buying opportunity. This was a little zone here. Even this right here, I guess you could call that a zone, because it did, because it did break these highs up here. Let me just copy, or I'm not going to sync that to all the charts, but if you want to go down to a 4 hour, you want to look for a nice zone. Even a 1 hour wouldn't be bad to go long at. But yeah, I'm just gonna wait to see. I'm not gonna go into too much detail here. I'm just saying I'm gonna be long bias on the euro here, and prices in this newer form demand zone. So I'm definitely gonna be looking to go long next week, because look at this data here. It's extremely bullish, right? So that's just kind of what I'm basing my trade off of. And we'll go to the Aussie dollar. We'll start here. Aussie ranks number 1. Like I said here, their quarter over quarter, year over year GDP has changed. It has gotten worse, but still remains ranked number 1. This is interesting here. Their long to short bias is exactly 50-50. So clearly they've been taking profits. As we all know, the Aussie has been on a pretty big uptrend, but they're clearly taking some profits here. But they actually added to their longs last week. They added more longs than shorts, and this whole time they've been adding longs. Look at this. Longs, adding them. And they've also been adding shorts. They've just been taking their profits, right? But even if you look from here, you can see this different coloration here, going lighter to darker green to darker green. It looks like they're going to be, increasing their longs here. I don't know if they're going to be taking more profits here. We'll have to wait and find out. But it's kind of a tough one right now. I'm definitely long-term bullish on the Aussie dollar. But as you can see, we've been coming up. We're up to this monthly area of supply. This isn't the greatest supply. I just wanted to mark it out. Definitely wouldn't really put my money on that as far as a shorting opportunity. As far as the daily goes, this is where we're at on the daily time frame. I don't think we got a nice confirmation in here yet. Getting a little bit of a 1 hour here. Took out this supply. I might take a stab at that. If I did, it would have to be, pretty small risk. because this demand zone is not the best. I'm more looking down in here, but even this is all tested. So we'll have to kind of just wait and see to see what happens on the Aussie dollar, because nothing's clear cut. Like I said, the data is showing 50-50, so clearly they're taking profits. But if you look at this data, they've just been adding long. So I think realistically they think that it's going to go up and that they're just taking some profits. So that's my thought process behind Aussie US dollar. USD CAD. We'll start here. So the Canadian dollar, they're 70% short, or the ranking's number 4. It's tied with the US. 70%, but their short bias is pretty extreme, 70 to 30. We'll go to the COT data here. So yeah, this is just this is for their pair now, USD CAD. So they are 60% long on the pair USD CAD compared to 33% short. Looks like they added some positions, basically what they took off the week before, but they also added a bunch of short positions, probably to take a little bit of profit. So yeah, they've kind of been remaining in this. Their longs have been kind of steadily the same, right? And it looks like now they've been increasing the shorts a little bit. And we'll look at the chart. Get rid of that. Oh, sorry about that, guys. So we'll get rid of that. We'll look at what we see here. I have talked about this in a couple of my previous videos. We are in these areas of demand. I do expect to see a pullback up, but in reality, I do think that we will be rejected somewhere in this area. I'm not sure where. We have another little weekly area right here. That's not the best, but I'm just trying to see if price does pull up, where are we going to pull up to? None of this is great. I'm not a huge fan of any of this. I don't see price turning around right here. It could, but there's nothing I'd be looking to trade here. But I am long bias on the US dollar, Canadian dollar, USD CAD. I do have a long bias here, based on all of that data, and the fact that they've been, their longs have been kind of the same, and their shorts are increasing now. But it's a kind of a tough one to read. But I do see a pullback happening. Nothing crazy, but like I said, I'm long-term bearish on the US dollar. So go to the Japanese yen. They're ranked number 3. They're a buy, especially considering this is what I like to see. The Aussie one, yeah, it's number 1, but it's like 50-50, right? But these are what I like to see. I like to see the strong currencies as far as rank goes, 2 and 3, the Swiss and the Japanese yen. And look at these. Look at the COT data here. 72% long to 28% short, 73 to 32. These are great imbalances and divergences that I want to trade. That's what I want to be trading. So we'll stick with the Japanese yen for now. It's ranked number 3. 73% long, 32% short. So what are we going to be doing? We're looking to buy the Japanese yen. That's kind of what I'm getting at here. And we'll look at the COT data, even though kind of already know what it's going to show. But clearly they've been taking some longs off, which means that they've been taking long. Yeah, so this is for the pair USD Japanese yen. So they've been taking off some longs last week, but still remain pretty bearish on USD Japanese yen. I don't know what this is here. I think I just drew this out as part of a supply zone. I'll get rid of that. Looks a little better. This daily area was already tested. This whole chart is just kind of whack. I'm not a huge fan of any of this. I just don't know where to get in long here, or short rather. That's my biggest struggle with the Japanese yen here, is not really knowing where's the quality areas, because all this is tested. That would have been a decent trade. I don't know why I didn't take that. I'm kind of mad at myself for that. I think the reason is because, I don't know, it just looked kind of weird to me. It wasn't like a great looking zone, this big wick down, but whatever. So what I might do is wait for momentum to shift down, wait for this EMA to turn down, maybe go onto the 4 hour and find a zone, because I don't really see anything great in here. Maybe I'll wait for a new zone to form. take profits around this demand area down here. But overall, like the USD, Japanese yen, the COT data and the currency strength data, it's all very clear. It's just the charts that are very choppy and not really sure what to do. I should have taken that trade. Stupid. But whatever. The pound, this is another one that I haven't really been messing with the pound lately. Their ranking is the worst. They are number 6. Based on all this data here, it is the worst. 53% long, 47% short, so basically 50-50. It's one that I've kind of just been staying away from. We'll go to the COT data here. Yeah, so they just keep doing the same thing, right? Where like this week they took off 8,000 longs, they took off 8,000 shorts. This past week they added 3,800 longs, they added 3,100 shorts. So it's just kind of been remaining pretty even. But as you can see, it's been going up. But like I said, I'm probably short biased based on the currency strength. So maybe when price does get up to this monthly area, if it does, I'm definitely going to be looking for shorting opportunities. That's for sure, based on the currency strength. It is in this weekly area of supply right now. That's not the best in this 3-month area, but I do expect kind of a move up. I'm not sure if I'd want to be buying the pound. I'm just not even sure if I'm going to be trading this at all. What I might do is use the pound as a weak currency, and what I might do is take the pound and then, try to trade it with the Japanese yen, the Swiss, or the Aussie, instead of using it against the United States, because they're pretty even as far as strength and COT data goes. But I'd rather put my money on UK and the Swiss, right? Like where they're 72% long, ranked number 2, where the UK is ranked number 6, and it's kind of unknown what they're doing with it, right? So I'd rather pair the UK up with, a very strong currency instead of a mediocrely strong currency like the United States, based on all the data right now. We'll go to the Swiss franc. So Swiss franc number 2, it's no surprise. We've already kind of talked about this. Very long bias compared to short. I like that. That's the kind of things that I want to be trading. I just haven't found an opportunity. They did add some longs though, which means that they added some longs in USD Swiss, so that means that they added some longs to the US dollar, but they also added some shorts. So I think that they're just taking a little bit of profit here because they still remain very short or long bias on the Swiss. It's been kind of a weird one. I missed out on a couple trades here that I definitely should have taken. I can maybe see price coming up here. I don't know. Maybe this is what they're doing. They've just been taking profit on their longs. Maybe we will see a rally up to here. And if price gets up to there, this is where I'm hopping on short, which means I'm long the Swiss franc. If you guys are confused about that, ideally I would like for price to get up to here on the daily, which is this weekly area. So maybe now, like as you can see, we have a couple new little areas here that price is creating. That could hold up price. If this breaks above this wick right here, I'm probably gonna be looking for longs to go all the way up to here. Right now, I just don't want to be fading this up to this zone if that's where it's gonna come from, because I could still see price reacting, going further down. What I might do is in the side of this area, I might be looking for confirmation on maybe a 4-hour or something like that. We'll look here. This isn't really great. I don't really want to. This is nothing I'd put my money on. Didn't remove anything that I liked. You could take it. It would just be high risk, very aggressive. But nothing wrong with that. That's nothing that I want to put my money on. But yeah, we are gonna have some trouble in this area, I do believe. Shit. Whatever. So yeah, I am definitely looking to go short. I'm just waiting for a setup that I don't mind putting my money on. All right, and we'll go to gold. Gold, it's having a little bit of a pullback. I actually haven't looked at the data yet for gold. Let's take a look. So I'm winging it here. Still extremely majority long. They added a bunch of longs and took off a bunch of shorts. So seems like they're just going long, and maybe the retail traders have been pushing price down. Obviously, we've been seeing a pullback on silver. I would like to see, or on gold rather, I would like to see price come down to this area so I can get long again. Maybe I'll even buy some more physical gold down here for my long-term insurance inflation hedge. This is where I want it. I would love for price to come down to this area. I would die for price to come down to this area. I just don't know if it will. So I am going to be looking to go long. On the daily, I don't see anything I liked here. I just see these supply zones working very well. So ideally what I would like to see is for price to, whatever it wants to do down here, right? Maybe push up, break this supply zone that's been holding. Maybe come down. We have a new demand formed right here. Maybe price comes down. Boom. This is where I look to go long. And I ride it up for at least a 2-to-1 up to this supply area, which I do believe, based on the fundamentals, that this supply area won't hold. That's kind of my thought process there. Maybe that'll happen. Maybe it won't. As far as now, I don't see any demand zones that I'd be looking to go long at here at all. And we'll look at silver. It's a similar picture. Look at the COT data here for silver. They added some longs, took off some shorts. Similar picture to gold. Obviously, not the amount of volume, and they don't have as many positions, but it's still very long bias. They added some longs, so still long bias on silver, especially based on the fundamentals. One thing to consider is we are coming up to this 3 months. We are in this 3-month supply, which is pretty big picture, right? But we are in these. I don't know what's going on with my charts. We are in this monthly supply as well, so I'm not surprised that we're seeing a pullback. Some people might be. They're not even looking at these zones and like, oh, why are we seeing a pullback? Well, that's why, I think. And based on the rally we've had, it kind of makes sense that this is where people will be taking profits. And I knew that once this daily area of supply was formed, that we'd have a hard time getting past that. I noticed this area of demand here. I'm going to mark it out. I didn't like it. This is nothing that I wanted to put my money on. Kind of based off, it didn't take out this high. It did take out a little bit. We had price come right back into the zone. I was looking to go long in this area, and I'm like, I don't know if I want to be putting my money on that, to be quite honest. So ideally, what I would like, similar to gold, would be to come below here, break down here, maybe form new demand, pull back. That's the trade. Boom. That's kind of what I'm hoping happens. If not, and if I don't see anything that I like, then I'm not even gonna look to go long. Oil, I don't think I have any data for oil. What's going on here? No, I have no data for oil. Next week I'll add that in. But oil, we've been seeing a pullback, and I'm not surprised. As you can see, we're in this weekly area of supply. It's a 50% candle, not the greatest supply area, but it's been on a tear lately, and I am expecting price. I am looking to go long on oil, and I'll show you where I'm looking to go long on oil in this area down here. It's $38 area. As you can see, these wicks are kind of pointing down to the real supply, which I believe is right there. And this daily area at the $38 mark is right around here on the weekly, which is same area, $38 area. But we are creating this new supply right here at the $42 area, $42.60. Mark that as sellers. So that's something I would look out for. If I do go long around here, I want to tighten up my risk, maybe get in long at the proximal line and maybe halfway through as well. And my ultimate target will be this area here. So ideally what I would like to see for oil, maybe we mess around here, maybe I go long, take off some profits, final target there, letting it ride. That's what I would like to see on gold or on oil. And we are due for this pullback, but I do think that oil is only going to go higher. And like I said last week, I think that I don't think we'll have any issue going up to this area of monthly supply that is at the $55 mark to $60 mark. I don't think it's unrealistic to see $60 oil. But yeah, that basically breaks down the whole market. It's a long one, but if you guys made it this far, let me know. I really appreciate you guys listening, and all I ask of you to do is like, share, and subscribe. All right, guys, let's kill it this week. Let's make a little money. Take care.